What's up guys, welcome back to DCA. So in today's video, I'm really excited to show you guys the site that I've been working on with the guys over at Upside Down Data now for about a year. So we've been collaborating, we've been coming up with ideas, and we finally got it all together, and myself and them, we're very excited to show you guys kind of what we've come up with. So the site is called polaritydigital.io. Basically what we're going to be doing here is providing a space for our communities to come together and kind of look at the metrics that we've made, look at them visually and graphically, but also to make your own metrics. So I'll kind of talk about what I mean when I say that. But for starters, let me just kind of go over the site. I'll show you what the basic features are. And then I kind of want to talk about one of the ways that you can use the site in order to sort of start to visualize metrics without requiring coding knowledge and ways that you can do your own research. So let me start by saying that, we're still kind of in, even though we'll be opening it to the public, we're still in a beta stage. And what I mean by that is this is the basic core of the website, but there's going to be a lot coming down the pipeline over the next month or so. So we've just got the basic layer of the site out. You guys will be able to, start using it now, but you can expect a lot of different things to be coming, and I'll kind of talk about some of those as we go along in this video. So for starters here, what we're looking at is the dashboard. This is your basic dashboard. It's the market analytics page. And you'll notice that on this page, we basically have this market analytics tab, and then we have this all coins tab. All right. So on the market analytics tab, you're going to see the risk metrics that we currently have released that are available on the site. And, I'm not going to dive into exactly what each one of these means right now. I will talk about one of them at towards the end of the video, but I'll be doing videos, and, the guys over at Upside Down Data have done videos covering what these are. And in addition to that, you can just mouse over these info tabs here, and there's a description as well as a link to a video which will explain each metric in depth. Okay. So on this market analytics tab, you'll notice that we have all of the coins. And on this tab, you're only going to see the coins that we have metrics for. So you can look at basically all of these different price metrics as well. So things like what has been the 1 hour percentage change, the 7 day percentage change. So if you just, you click one of them. So let's add the 1 year percentage change, and you can just save that and add it right in here. And then it will basically be something like if you were going to coin market cap. Okay. So it functions like that. And in addition to these price metrics, then you'll have all of your different risk metrics that we have over here. Now you can click on the altcoins tab and look at this just like you would on CoinMarketCap. So you'll see that we have Bitcoin, Ethereum, etc. And currently we're showing the top 250 coins. So you'll have all of the expected market and price information that you would expect on a normal site like a CoinMarketCap. So, we have the market caps of all the coins, the volume, circulating supply, and then you can see what other types of things we have here. So the next thing that we can look at is this all categories tab. And this is actually going to show you all of the coins that will fall under any of these ecosystems or categories. So for instance, if you wanted to see what all the GameFi tokens were, you could just click that, and then all of the GameFi tokens will load for you. And so you can kind of compare them against themselves. Because as we know, certain sectors, and especially as this market matures, we will expect various sectors to start to perform better or worse. And so we may want to analyze the markets by looking at sectors themselves rather than just saying, hey, what's going on with all of the coins. For instance, if you wanted to look at smart contract platforms, there's just a numerous different categories here. So, you can scroll through and kind of see what there is, including things like the Ethereum ecosystem, Solana ecosystem, etc. And if one of these coins that falls into that ecosystem is within the top 250, it will be shown here. At some point, we'll probably expand out past 250, maybe to 500. But I think right now, if you're reaching out past 250, that's not really the kind of thing that we like to focus on the channel or on either of our channels. So it's not really something that we're making a priority at the moment, because once you're reaching out past 250, a lot of times you're getting into the junk coins that don't have any use other than speculation. Okay, so with that said, let's come back here and just quickly look at something like, let's just look at Bitcoin and Ethereum on the market analytics tab. So you'll basically see the price right now. Bitcoin's just above 23K, Ethereum sitting right above 1600, and basically our standard price metrics, 24-hour and 1 year. You can change that into whatever you'd like to see, 7-day, 1 month, etc. You could look at the all-time high. You could look at the drawdown from the all-time high, the volume, as we said, and this is all within the market analytics tab. Now, the reason that when you go to altcoins, you can't look at the various metrics is because we only have metrics at the moment anyway for certain coins. So in the future, it's very likely that we'll widely expand this or find different ways in order to apply it to basically all of the coins. And at that time, maybe we just merge these and then allow you to select the different metrics. Now, one of the things I'd like to quickly say that we will be adding in the very short future is actually a user login section. And with the login section, you'll actually be able to save your preferences. So let's say when you come on, you don't want to see 24-hour, you don't want to see 1 year, you want to look at all-time high, drawdown from all-time high, and market cap. And that's what, personally you want to see every time you come on. Well, you will be able to save that and it will load for you, and you'll be able to save different profiles, that sort of thing. Sort of a tab where if you want to see this, but then quickly want to be able to move back to the price information, you'll just be able to quickly switch profiles here, and it will allow you to just instantly switch between those things. Or maybe you don't want to see all of these risk metrics. Let's suppose you don't want to see the UDPI medium and short, you only want to see the UDPI long. That will allow you to do that. So that's one of the things we have coming. In addition to that, you'll be able to save all of your favorite coins. So let's say you want to favorite Bitcoin, Ethereum, BNB, whatever. You want to basically filter out a lot of stuff that isn't important to you. You'll be able to easily do that and just save it right to your profile, so it's ready to show you every time you log on. So the next part of the site I'd like to show you is the research section. So we're going to be releasing articles, probably a weekly newsletter. In addition to the weekly market analysis, you're also going to be getting a lot of unique topics where we may do deep dives into particular assets. We may talk about things related to the macroeconomic picture. We may look at on-chain analysis, and a lot of this could go right into the weekly market analysis, but there may be, in many circumstances, times where we want to focus on one particular topic outside of our weekly newsletter. You're going to be getting high-level market analysis in addition to more niche topics that may not appeal to everyone, but I think at least in the weekly newsletter, there's going to be information that is directly actionable and applicable to every member of our community. So as an example, this would be a more general topic that we've released, the market report. And this was released about a week and a half ago at this point. But you'll see that we've just covered a wide range of topics, and we try and do it in a way that, we've tried to make this as professional as possible. We've tried to make the graphics visually appealing and easily readable. So this is the kind of information that we're bringing here, and we're trying to bring it in a high level fashion. We've tried to make our visuals very appealing, but also very relevant to the market. We want the information that we're looking at to be actionable, and we want it to be something that is providing value to the community. And I think that's what's most important to us. It's actually creating value, not just creating content. Content doesn't matter. It's very easy to make. You could come on and talk about the 20-week moving average every single week, and that provides absolutely no value. Value is created by helping the investor understand what's going on and why this information impacts them and what can they do about it, quite frankly. Okay, so this is the last thing I quickly want to talk about. This is the Polarity Digital Workbench, and this is basically going to be a platform to allow the community to perform various types of analysis on their own without requiring the knowledge of coding. So if you're someone who has always wanted to, do any type of analysis on TradingView, but there's sort of that barrier which requires you to know how to code in order to make your own metrics. We've basically made this platform here so that you can do that on your own without the requirement of needing that coding knowledge. So I kind of quickly want to show you what's offered here right now and what you can expect coming in the future. So we do have this tutorial here right now. I'm probably going to revamp this in order to make it much more comprehensive and easy to read because, quite frankly, there's, I mean, I don't know, maybe a 3-minute read right now, but I know people don't want to go over this kind of thing. So I'll probably lay it out in the future in hopefully an easier way. But basically how this works is if you have your Bitcoin price here right now, if you want to add a metric, all you do is you go to add and then metric, and then you select the coin you want to look at. Now, right now, from this menu, all we have are the coins that we have risk metrics. But I want to show you guys something real quick, something that even a lot of people who have been using the beta test don't know about. If you come over here to all coins, so these will include a lot of coins that we don't have risk metrics for. And let's say you wanted to look at the market cap of Dogecoin. So right now, all you need to do is you come over and you click market cap, and it will basically show you the price of Dogecoin in white. That's going to be this white metric. And in green, you're going to see the market cap. Now, you'll notice that they look very similar, and that's because they are on different scales, right? So we have this y-axis and a secondary y-axis, and that's indicated to you right here by telling you that the Dogecoin market cap is on the y2 axis. If you wanted to put them onto the same, you would just, you could look here. The price is on the y1 axis, and it's always going to go y1, y2, y3 in the order that they're loaded. So you would just put it on the y1 axis. And now you'll see that, okay, there's the differential. So the price of Doge is down here at around $8, whereas the market cap is 17.3 billion. So what I'd like to show you though is, let's suppose that we want to look at Bitcoin, right? And let's add another metric. So, there's, like I said, there's 2 different ways to get into the Workbench. You could just click it here in the drop-down menu, or you can click on one of these metrics here and it will load it with the price. Okay, so what I want to talk about then is the MDC. And I'm just going to quickly show you how the Workbench can be a powerful tool for you. So the MDC, and this is something that we're going to have to learn about as we go, or, I'm going to have to teach you guys as we go, kind of what each of these metrics are and sort of how to interpret them. Although, as I said, if we come back here, there is an explanation here, just a very quick explanation that will tell you sort of what you should be looking for with each one of these metrics. But with regards to the MDC, and let's just add that again. So we'll come to Bitcoin and then we'll drop down and just add the MDC. Okay, and this stands for the Market Direction Classifier. And so this is a machine learning algorithm model like a lot of the others that we've created. And, this is basically going to be telling us whether Bitcoin is in an uptrend or a downtrend. And I'm going to show you how powerful this has been in the past and how, quite frankly, it continues to be a powerful metric because this is the type of metric that provides a huge amount of actionable information and has given the user the ability to make money both in an up and a down market. And that's if you have the ability to short assets, because if you're able to capitalize on this metric in a bull market, I think it's huge. And at the same time, when the price of Bitcoin drops below this MDC or this market direction classifier, if you're able to short, if that's something you're even interested in, I think I'll just show you here how profitable it could be in any kind of market. Remember I said that anytime we assign a metric, it's going to go to its own axis. So Y1, Y2, if we added something else, I'll just show you what will happen. We'll add like the TCI. It's gone to its own axis. So it's on Y3 now. All right, so each time you add a metric, it's going to go to its own axis. And that's because you may want to look at something like the market cap of Bitcoin, and then at the same time, look at a metric that has a scale of 5 to -5. So that's obviously not going to be easily visible on the same graph like we're looking at right now. So assigning it to its own axis is going to allow you to easily see them together. So we'll just remove that. All you do is click where it says M3 here. You click M3 and it goes away. Now, every time you add a metric, and this is kind of getting into the weeds a little bit here, but it's very easy to understand. Anytime you add a metric, it gets an assignment. So it's M1, M2, M3, and that stands for metric 1, metric 2, metric 3, okay? Let's suppose we want to perform a little analysis here. Or, well, first of all, let's start by putting this onto the same axis. So I'll zoom in a bit so we can see exactly what's going on. You'll see that these are on the same axis now. The white is the price of Bitcoin and the green is the market direction classifier. And the way this metric works is when Bitcoin is above the market direction classifier, that indicates a strong chance that the price is going to continue up from there. What we can do now is, let's say, this is kind of hard to look at. I want to know, just tell me, when is the price of Bitcoin above the MDC? So we can add a formula then to do that. And all you have to do is hit this if button. We'll kind of talk about this in much further detail later. And like I said, I'll talk about this more in the tutorial. But when you click any of these different operators here, it will automatically load up here. And all you need to do is kind of follow the formula here in order to get the output, whatever that is that you want. So in this case, we want to know if M1, remember that's metric 1, is greater than M2, which is the MDC or the market direction classifier. Just tell us what M1 is. And if it's not, give us a 0. Okay? So we'll just evaluate and draw. And you'll see now that we've added that, and we're going to add it like we always do to the same axis. So now they're all on Y1. Now we have a visual representation of when the price of Bitcoin is above the MDC. And that indicates to us that there's a strong chance of an uptrend. And we can do the exact same thing here. If we wanted to add another formula, we can give ourselves a visual indication of when it's below the MDC. So that means a bearish trend is very likely to occur. And all we do is we change this greater than sign to a less than sign. So tell us when the price of Bitcoin is less than the MDC, evaluate and draw, and we'll add it over to Y1 just like we did before. And there you go. And we can change the color if we want, which we'll do in this case just to make it a little more clear. When we have a pink line, that indicates that the price of Bitcoin is very bullish. When we have this yellow line, it's very bearish. And so let's look at that now. Okay, so let's look at historically how strong of an indicator this metric is. So let's go all the way back here to this cycle, this 2013 double peak cycle. Right when we got above this line, and we'll just bring the chart in a bit here, right when we got above this line, that indicated that you should get into Bitcoin because it's a very bullish sign that we've gone above the MDC. And sure enough, we go up and we go above. We kind of grind right along the side of it. So, we drop down to it and just below. But overall, the price of Bitcoin just kind of goes sideways. And then right when that trend is ready to continue again, the MDC tells us, all right, it kind of stalls out for some time. And right when it's ready to continue again, it tells us, okay, it gets us out right around here during this huge drop off that we had. And then it tells us to get back in. Importantly, it tells us to get back in right at around $100. And then if we really zoom in here, and I think this is going to really show the strength of it, it tells us to get in at $100 and it tells us to get out right around here at around $900. It may not have been clear whether you should be in or out, but the MDC was very clearly telling you get out. And then just like here, it told you to get in at around 650, and then it told you to get out again right around here at $800 before the real bear market took over. And you can kind of see how this then progressed. It got you in for a while, but then this uptrend stalled out. So importantly, it told you to get in. It said, hey, maybe there's an uptrend brewing here, but it got you out before you lost any money. In fact, you made a little bit of money here, right? Because it got you in at 530 and then it said, hey, get out at 570. Importantly, it saved you from the bear market. And now at the same exact time, if you were shorting these times when it dropped below, you were making a huge amount of money because you're going long when you break above and you're going short when you break below, right? So you're shorting from 780 and then you're closing that short position out at 500. And then as the trend continued, you're shorting up here at what, 540, and then you're closing that out down here at 260. So it's been a tool that has the potential to save people from making these mistakes, where a lot of the YouTube community, a lot of the Twitter community is constantly telling you to be bullish, to be bullish, to be bullish. But this is a metric that is attempting to save the community from falling into those traps. So it's telling you when we're in an uptrend, and then it's telling you when it's very likely that that uptrend may come to an end and we're heading into a more bearish segment of the market. And the same thing back here. If you take a look back in the 2018 cycle, it got you out right near the top, right near 17K. And there were a few times where it suspected maybe we're in an uptrend, but, and again, this is the important part. Notice that it's telling you, hey, we may be in an uptrend. The uptrend doesn't work out, but it gets you out before you lose any money, right? I'm not, and I don't mean to say that this is financial advice. This is what you should be using, but it's getting you out of these positions that are kind of false starts or false bull runs before they turn into a loss. And you can see that in each case, right? You may take a tiny loss, but we're talking about a few percent here compared to the 50, 60, 70% type losses that people are going to take when they continue holding. And let's take a look, kind of how this played out then. So it had you out of the market. It kept you out of the market as we had this massive price drop going from 6K all the way down here to 3,100. And then where did it get you back in? Right at around 3,600. And then it got you right, this, you can't make this stuff up. It got you out right as this 2019 bull run was coming to an end. It got you out right here at around 9,700. Right. And I know that this metric easily warrants its own video, and I will definitely do that. But I just kind of wanted to show you the power of using math instead of emotion to make decisions. And I want to show you this right here. This is, in my opinion, one of the most impressive parts of the MDC. So take a look at the COVID capitulation event where we go from 9K rapidly down to around 4,800. The MDC gets you out right here at $8,000. So if you were paying attention to this metric, you got in at $8,000 and then you got out right at $8,000. Okay. Avoiding the COVID capitulation event. And then it puts you back into Bitcoin at around 8,800, 8,700 or so, right? Just as you're crossing above here. And obviously that's going to take you into the bull run. It gets you out for a short time here, but again, it gets you out, but it gets you in at a lower price. So it gets you back in as you ride it up from down here at around 30K, where you rode it up to around 54K. And then it saved you from China. It saved you from Elon Musk, and it saved you from sort of fears about inflation that we experienced from May all the way down here until July, when it said, hey, get back in. Get back in at the end of July, AKA get back in at the perfect time. Get back in right here as we're about to start this bull run. It told you to get in here at around 34, 35K, and then it got you out up here. And it's kind of been bearish all along. There have been a couple false starts, but again, these were non-consequential to your account because the metric kind of, it said, hey, get in, but the market turned over. So these are these kind of false starts, just like we saw back here in 2018. We saw a few of these false starts. And what happened? Well, these were of little consequence to your account because it said, hey, you should probably get out because we thought there might be an uptrend, but it doesn't look like there actually was one. So it gets you out basically at the same buy-in price in the instances where it does tell you that maybe there's an uptrend. And so in some of these, you take a 1 or 2% loss, and in others, like a false start here, maybe you take a 1 or 2% gain. But it's not about these little false starts. It's about these big moves. It gets you in and it gets you out at the right time for these big moves. Like I said, if you were shorting here, let's say you're shorting here at around 40K when it's telling you to get out, you close that position down here at 20K. Okay, so that's 100% gain. And the same thing is what we saw right here. 21, it's telling you to get out at around 21, and then it tells you to kind of get back in at around 17 or 18. All right. And so we're in an uptrend right now. Now, based on what we've seen a lot in the past, this could be a false start. And I wouldn't doubt it if it is. But at the same time, what you can do with a metric like this is kind of layer in. So you don't need to go all in just because the metric crosses above right away, because we know in these longer term downtrends, you can have some false starts. But overall, you want to respect the metric, I would say, and understand that, if this is the start of a run like we saw back here in 2019, let's just go back and look at that. If this is a start of a run like this, you don't want to be the guy saying, "Oh, I don't believe it." You probably want to be slowly getting into the market and, following the run. And then if it is a false start, well, we've seen, 50 different instances where these false starts end up being essentially non-consequential to the investor. They're quickly corrected by the MDC. And so it may be a tiny loss, but it's much, much better than taking a 1 or 2% loss or even a 5% loss compared to the people who are going to hang on here saying, nope, nope, it's definitely bullish as we go from 7K down to 3K. All right, guys. So this is how this metric works. And I think that it's just an amazing metric for people who are more interested in you're looking to enter and exit positions based on the market momentum, based on kind of what's happening in the market. And so this provides those people with an amazing tool. And so what I do is I kind of combine my DCA strategy in addition to using this. So, if we really head below, if we start heading below, then I may take a short position in addition to my DCA, because I want to continue to accumulate Bitcoin, because I know eventually it's going to make that turnaround. But I can also offset those losses that I'll be taking on any DCA that I make by taking a simultaneous short position indicated by the MDC. So this is one of the strongest tools, I think, and I really think it's one that you should check out. And I just wanted to quickly show you a very simple formula that anyone can make without any knowledge of coding. All you have to do is follow the syntax correctly. And if you don't know what the syntax is, well, all you have to do is click on one of these and it will show you exactly what the syntax is. So the M is always going to be the metric, and the number is always going to be the number of days. So 7 means 7 days. So if we want to look at the 100-day running percentage change of Bitcoin, we just hit that. We put it on its own axis. So we put it on Y4, and there you go. You have the 100-day running percentage change of Bitcoin. Now you'll see even something like this gets skewed because it's on a linear scale. So if we just switch it up to the log scale, well, you can't put a log scale on a percentage change, right? Because you can't have logs of negatives. So we kind of have to look at it on a linear scale. But what we can do is kind of zoom in, and it will give us a better picture, because you have to remember 2011 kind of skews everything. The numbers back then were so extreme that it's going to clearly skew some of these newer numbers. It even skews the numbers from 2018. So if we just look from 2018, we've had kind of this diminishing returns in terms of 100-day percentage change. But this is how this works. You can see all these different metrics up here. Now, I don't have a tutorial talking about each specific one, but I will be adding something like that very shortly. So you guys can just kind of watch for that, and that will be coming out soon. And I think that's pretty much it for now. Like I said, a lot of this is going to be customizable in the very short future. We'll have the community section where people can share different ideas. We'll be adding a lot of different metrics. So we'll be adding economic metrics, and those will allow you to create a lot of cool tools on your own, and, allow you to sort of perform analysis far beyond what you're able to right now, given that, we're just trying to get it out there and show people what the potential for this is and show them what this site can offer. But I think this is really going to be significantly more robust in the future. And one last thing I want to quickly mention, if you want, you can rename these formulas. So, you can call this BTC greater than MDC. And that's just an easy way to keep it all organized up here, because, you can just click on them to kind of hide them. So let's say you want to hide the Bitcoin price and you only want to see when Bitcoin price is above MDC. That's what it will show you right there. And you can just see visually Bitcoin is above the MDC in these uptrends. In every uptrend, Bitcoin's well above the MDC. And then in every downtrend, you kind of don't see anything, just these small blips. So it's a very strong metric for showing uptrends. And, it's at the same time, it's a very strong metric for showing downtrends. So you should kind of respect it in both directions, in my opinion. So that's going to be it for this one, guys. Now, I'd really love to hear your feedback about this. So there's a couple of ways you can let me know what you think we should add, kind of what features you think we should change. And you can do that by going to the Discord. You can email me at support@polaritydigital.io, or you could message me, just in the comment section or on Twitter. Any of those ways are fine. I do want to mention that I know a lot of people like a light mode, so a light dark mode. That's something that we're going to add. It actually takes a lot of work to do that, so it's not going to be like the number one priority for now. This is kind of what you're going to get is the dark mode, but it will be something that's coming in the future. And just a lot of the little tiny graphical things like that we may not have right away. A lot of the things we're trying to do in the next couple of weeks are going to be feature based, unless they're things that we can easily do. One last thing I'd just quickly like to point out, you can see all our videos here, right? So you can just come up, see what our videos are. You can come to all videos and you'll just see them all right there. So let me know what you guys think. I'm really excited to hear from you guys about this. And I'd like to know, if this is something you'll use, or do you think it's not needed at all? Let me know. All right. Thanks, guys. Until next time, as usual, see you.